Anyway, we have someone to guide us into this fall quarter that we're about to head into. And Rohit, it's always great to welcome you back to Face. Thanks for coming here today. What are
Great
you
pleasure to
seeing,
be
buddy?
to be on an interesting day, week, month. What should I say? Season.
Yeah, yeah, that's right. Season. We're headed to, I think, 3 days away from the beginning of fall. We had a lunar eclipse last night, so I have to go out and harvest my wheat and corn in another month and fill up my silo so that when we have a famine, I could help everyone out. That's my plan. What do you think? Anyway, I mean, even the grains are popping. So if you want to share your screen, Rohit, I'm
Yeah.
looking forward to seeing your technical work. I always enjoy it, always learn something from you.
Yeah. I really wanted to start since you said season. I want to start with some seasonality charts.
Yeah.
Uh, One on India, and then I'll just look at what is happening in the US. In India, we usually have the worst seasonal months here are February, and followed by that is September. So we are in the weakest part of the year. Markets have been pretty much flat this month. We haven't seen much gains compared to the last 2 months. But we haven't had a correction yet, though I think there are a lot of divergences, a lot of positioning data, all of which is pointing to a potential decline. So we're really waiting for that to confirm. Maybe it only happens after this event, because sometimes events like the FOMC meeting can end up being buy an expectation and sell on news. And in the near term, at least, that is what I'm trying to look for. And one of the reasons is, like I said, seasonality. So I'm just going to quickly show you what has been happening typically with the US elections, which you sometimes call as the presidential cycle, is essentially September, late September to till the point where you have the election results. The last three times that I've plotted here, the markets have been down. And then once the election results are out, they've actually gone up. So this is 2012 when that happened. Repeat here, 2016, Donald Trump. Repeat here, 2020, Joe Biden. And this is where we are. We are bumping up to the top end of this range. But I'm thinking that if the same seasonality is going to play, then what we should be looking for first is a dip into the election results into late October, and only pick up and head higher after the results are out into probably January. So something like this is what I'm trying to think about. I'm wondering whether it gets worse or not in terms of the downside. That I'm not that there are enough other reasons to believe that, but I've discussed a lot of reasons last time why that should not be the case. But it might end up being that the market does pay attention to some of the things that have just happened. For example, the yield curve inversion, right, de-inversion rather, the steepening that has
Yes.
started to show up. And so that is one thing if the market does pay attention to. I spent a lot of time thinking, and I discussed this last time, that in an inflationary environment, possibly that doesn't lead to a recession. But the fact being that on the last four occasions, as I'm showing here, there was some level of market reaction. The smallest one was 1990, where the market only fell 20% and then it went back up. But it did happen. At least there was some setback due to the steepening. The other three occasions, we have seen a serious correction or a recession into 2020 as well. And then we're having this right now, right? We've just crossed the line. We've crossed the zero line. And so that raises the question, are we set up for some kind of market reaction? And this also ends up happening at the same time when the 2-year yield falls, right? It's linked to the 10-year, 2-year story. But if I take a slightly longer term chart, the 2-year yield ends up reversing to the downside around these crises. So will we get a crisis here? And we even have an ending like pattern on the 2-year yield this time. So the warnings are also there, and the reasoning why it should, at least if it just ends up being a routine correction, it can still continue and not be a recession because of the inflationary environment. That also, I think, is at the back of my mind. But near term, at least for the next couple of weeks till the election time, I think there's a good case for a dip, especially again, if I look at, say, weekly momentum here, I'm looking at the our own momentum indicator, we have a double divergence, negative divergence on price. So I usually look for these cycles to complete, which means if you get this kind of a dip, the RMI comes back to zero, and then we start a new cycle. So I would not expect a new cycle till that is complete. So this is sort of
Okay.
my inner, yeah,
Can I get a question in?
surely,
So you're looking for this dip, Rohit, but
yeah,
we haven't made new highs in the S&Ps, and a lot of people have this wave, not pulling back, but continuation move to complete five.
yeah.
That's also an option, isn't it?
Yes, that is also, you're right. That's also an option. I have tried to consider it in the possibility when I'm actually looking at the S&P chart here. I have tried to think that, whether 4 and 5 happen, but what I've seen is that if that is happening, especially at a larger degree, which means that if I'm trying to complete 5 waves up from March 2023 or from January of 2020 23, then usually that would involve a new cycle. So which is why I was expecting that the sell-off happens before we do the fifth wave, if there is one, rather than it happening right away.
Okay, because that would be kind of a blow-off melt-up scenario,
Yeah,
which bulls have been talking about that we really haven't had yet. We've been range bound here for a while without making new highs in the S&Ps. In fact, this is the third attempt,
yeah,
right?
yes, yes.
Um, or at
But
least, yeah.
but
Go ahead.
it's become such a most anticipated event that many of the underlying factors, like the dollar index, for example, is already fallen. I'm marking it as 5 years here. So on the weekly chart, if it does complete five somewhere here or in the next few days, what you get first is a rebound
Yeah,
before the dollar falls again. So this is where, so the risk is essentially here that you get some bump up in the dollar because we've already discounted a large part of the fall. The same thing we can see even in the 10-year, for example. The 10-year yield also has been falling consistently for quite a while, and could be due for some kind of a bump up before it goes lower. That's
yeah,
so that's why I thought that this possibly become a discounted event, looking at the way bond yields and the dollar have fallen. The
yeah.
only odd thing here has been commodity prices, which have actually not gone up while yields are falling. They're just waiting for the decision itself.
You're talking about gold and silver?
I'm talking about copper, oil,
Okay.
yeah,
Industrials.
industrials. Gold has, of course, done better, much better than the rest. Gold, in fact, looks more like this, like it has actually gone up in 5 waves. So if you actually look at the gold chart, we're sort of getting into the fifth wave, maybe an ending
Yeah,
diagonal. So it may also complete something out here. Uh,
yeah.
and
Interesting.
then we could be set up for at least a near-term pullback. This large part, I mean, I'm just talking about this 5 wave getting a pullback, and then continuing in the longer-term upward trend.
Boy, that'd be a nice buying opportunity. Okay, and that happens with the market because it's all one market still, isn't it, Rohit? I mean,
Yes.
for the most part, it's like a balloon. When the dollar's weak, everything expands. When the dollar's strong, everything contracts. Just
Yeah.
different degrees of magnitude,
Yes. Yes.
right?
That's, yeah.
Okay.
The dollar has become the central liquidity factor for
Well,
everything.
it hasn't become, it's,
Yeah.
it is, right?
It
I
is.
mean, it
It
has
is.
been for a long time,
Long
but
enough
that's,
time. Yeah.
yeah. All right. So the key is going to be the dollar. Whether we put in five here at 150,
Yeah.
or if we go to 97 first, 97 and a half, which is the next target for me, that would most likely support the melt up in the stock market, right?
Yes. So I'm thinking, I mean, like in the big picture, what I've drawn here is we did an A wave, a B wave, we are in C. I think the C subdivides into one of C, two of C, and three of C. And the next
I
leg of
see.
gains start happening
Yeah.
in three of C. So three of C is where I think the major melt up, which should also happen along with the commodity cycle, because if you look at the Bloomberg Commodity Index, that's also sort of getting to the bottom end of its range, almost a 66 61% retracement here. So I'm marking this as a second wave. And if you take
Okay.
a retracement, yeah, sort of
Yeah.
just not reached 61 yet, but the trend
Right.
line of the last two lows has been touched. So either it's done here, and we should be due to start the third wave sometime soon. And that therefore the third wave of the dollar, the next bull run for commodities is what I'm really looking for in the big picture.
Have you looked at agricultural? Like the grains have been under pressure since the invasion. They peaked in,
So I do like sugar, for example, and coffee. Those are two.
coffee was coffee was smoking yesterday, right?
Yeah, yeah,
Okay, you like sugar and coffee.
yes. So
Bring
sugar,
you
like for
what
example,
do you need
I've
any
just
cream in your coffee?
yeah,
All right. All right. So yeah, sugar had a nice pullback. I
it's had a
mean,
nice pullback. I'm saying it's
yeah,
a second wave, which means this is a large wave one and two,
nice. Yeah.
and we should be starting. We've broken out of this wedge, so I think we've already started a third wave, and that
Okay.
should be good for sugar and for sugar stocks. In India, we're a major producer of sugar, so sugar companies actually end up doing pretty well when the sugar cycle starts.
Okay. Sugar, coffee, so the softs. Um, okay, and
I
anything
mean, we
else?
could have
Oh,
a case.
you're showing
Yeah,
wheat. Wheat looks pretty good to me. Uh, wheat,
yeah.
the beans do, and corn looks pretty good too. Like we're getting a bottom.
We got
What do
a
you
double
think?
bottom and wheat, yes,
Yeah,
right
nice
there.
divergences. So
So it,
this could really. So you know what's ironic? I want your impression of this. Is that Powell is claiming victory over inflation
yeah,
right at the onset of a new
of the
bull
next cycle.
wave.
Yeah.
Yeah, right at the beginning of a new bull wave in commodities.
Yes. But
So
the good
go ahead.
news would be that it actually would show up in inflation data probably with a lag.
Yeah,
So say, for example, I mean, wheat is not going to go back to 1300 like tomorrow. It will take like 2, 3 years to happen. So by
yeah,
the time we start worrying about the next inflation cycle, we
right.
probably have a 1, 2 year period where we can still say that inflation is still low, and that's
Okay.
where the boom bust is, right? We can enjoy that phase till inflation comes right back. So it's definitely coming back, but I hope it's 2 years later.
Well, what if we're entering a deflationary cycle right now until the Fed opens their bazookas later?
So the only chart which is showing some sense of that possibility, I think, is oil, which is
Yeah.
knocking on this support, and everybody's asking me, can't you see this head and shoulders pattern,
Well, yeah.
which
What's
means
that measure? Zero? Oh, okay.
not
No.
zero, but definitely $30.
Okay. Yeah.
But we
Okay.
are still at that support, and so if I just think about it, I mean, we are of course doing charts, but logically, you wouldn't want to shut down the fracking industry, which wants $60 oil at least to stay alive. So in that sense, I would believe that policy at some point would get set in a way that we don't really break this line. We've held it so far. Let's see.
Yeah.
$65 is where the line is.
Yeah.
65, 64, somewhere there. If we break that, then we are in serious trouble with oil, and then possibly we really have to worry about whether deflation comes first before inflation.
Natural gas is a different picture. I actually think we're bottoming out there. Do you look
Yeah.
at it?
Yes. I also agree that I'm sorry, this is not natural
That's
gas.
Nova Gold.
I think this should be fine. Yeah. Yeah. So it has actually made a nice impulse pullback. I
Yeah.
do think so. This is a initial first wave and second wave,
Yeah.
and probably minor one, minor two. So yeah, natural gas sometimes what it often does its own thing. So I
Yeah.
don't try to correlate natural gas with anything.
Yeah. You shouldn't, or you'll end up, your wife will be a widow. We don't want that to happen. And I'd have to find another guest. So, anyway, all right. I wanted your impressions on that, Rohit. Anything else top of mind
Yeah.
that we
So
haven't?
so
Well,
yeah.
let me just ask you about one thing. If we get a melt up, the
Hmm.
other scenario, when I look at the weekly Bitcoin chart, I presented it today.
Yeah,
it looks like we could be on the verge of a breakout. Okay.
absolutely.
Okay. And then that's going to measure over 100 grand.
Yes, it's over 100 grand exactly. 100 and
All right.
1,07,000 is where I put it.
Okay. All right. So yeah, just a sideways consolidation to work
Yeah,
it
fourth
off.
wave. So the fourth wave is done here.
Yeah.
Uh, and I'm looking for that fifth, and fifth is pointing to 100,000, 107,000
Yeah.
on the upside.
So I don't see a big correction in the market with this happening because to me, this is a sign of liquidity.
Yes, absolutely. I agree. I agree with you on that. So this is a reason why it's not going to be very deep. But because of the seasonal cycle, especially the election cycle, which is what I started with, it's possible that equities diverge. Let's see. I don't know.
Yeah. Well,
That
who
I,
are you voting for, Trump or Harris?
well, I'm in India, so I don't
I
have to
knew
vote for
that,
either.
but according to our politics, people, they'll probably accuse people from India of sending in write-in ballots. So anyway, if you were an American, who would you vote for?
Now that's a tough one.
All right,
Not
you don't have
not
to
not that
answer.
it's going to matter to the market because 2016 Trump came in, the markets did well. 2020 Biden came in, the markets did
Yeah,
well.
great
The
point.
market's going to do well anyway. uh,
Could 2025 be the year of reckoning?
Possibly, we are
After
very
we
close
get
to it.
this, after we, I mean, I don't know why it took me so long to, everyone was saying I'm going to hold my longs until, right before the election and get out. And I
Yeah,
didn't think the market would make it that convenient for them. We did have that big swoosh in July, that made me think, see, everyone's universally thinks they're okay until the end of October. But you know what? It's possible they're going to end up being right, to have held
the,
until
the
the
only
end.
the only the only risk here, since we've already looked at the yield curve steepening and
Yeah,
the recession call, and that rate cuts happen and then you get a slowdown. The only thing which goes against the idea that we can get a blow off is that if this rally, I've marked it as 1 2 3, now we're thinking 4 and 5 happens, but we are still inside 161. Can we really get an expanded flat? I mean, can this be A, B, C? That is, I think, the worst case scenario if you're getting deflation, which we spoke
yeah,
about.
yeah.
Then this is the only horrible scenario. But there's no sign of it actually. There's no indication of something of that magnitude yet. But
Well,
we are simultaneously. So I didn't talk about the Indian market. In the Indian market, I am also seeing a 5 wave advance from at least this bottom, the March 2023 bottom,
yeah,
and the Nifty does seem to have completed 5 year. In fact, on the mid cap and small cap index, we have a RSI at almost 92. So that's gotten extremely overbought. And so those segments are really scaring everyone, that whether we can get a setback in the mid and small cap segment in India. And this 5 wave basically correct to some degree. So yeah,
okay,
this is what I'm watching out for India, that this 5 wave rise needs to get some correction.
okay. Rohit, people that are watching you live and will watch a video later, I'm sure are going to want to know how to, besides follow you on X at India Charts, how to
Yeah.
get a hold of you and keep up with your work.
So the
So,
India Charts app, both on the Google and on iOS, I think they can just download the app. So as and when I write an update, you get a notification that I've written something. And I write several updates every day. So it's like an ongoing commentary, just like a blog. And of course, if people want to use the data analytics software for India that we've developed, they can simply go to web.strike.money and start a trial over there.
okay. So I want to wish you good luck and hope that profits rain down on you
Yeah,
so
thanks,
that,
thanks a lot, Dale. Thanks.
and really appreciate your giving spirit of sharing your hard work, because I know you spend a lot of intensive time to come up with conclusions before you present them. So Thank you for your giving nature.
Thank you. Thank you. Welcome.
All right, so everyone, there you go. You have it. My trading warrior brother, Rohit Srivastava, and check him out. And especially if you're, involved in trading the Nifty. I know we have some people in here that trade that, and that's going to be a wrap. Be careful today. Rohit, do you agree with me that no one has a gun to anyone's head to have to trade today, and that it's okay to just let the dust settle?
Absolutely. I think waiting for a day is sometimes just helps you make sense of everything.
Yeah. Okay. So, keep an open mind. And, it's harder to keep an open mind once you're committed psychologically to a position. So you always see the market better when you're flat. You're more objective than you are when you're committed. And don't use, see if you agree with this one, Rohit, and I'll let you go. Don't use mental stops,
Yeah,
okay? Because you may not have the discipline to act on it, and then you'll say, well, I'll see what happens, give it another day. Anyway,
yeah,
the last time I used a mental stop, my first stop was a mental institution. So
absolutely. I've lost money on that too. In my early
yeah,
days,
yeah,
I've
yeah,
just done that, and the next day is worse, and the third day
yeah,
you've almost blown up your
yeah.
account.
It's a good way to become an investor instead of a trader. So anyway, Rohit, thanks again, buddy. Good luck today,
Thank you.
and
Good
good
luck.
luck, and good luck to everyone out there. Okay, and just reduce leverage if you have to. It might be a good day just to go do something else, come back later and see what happened, and then formulate your game plan. And don't just count your pips, count your blessings. We'll see everyone tomorrow for the aftermath. Adios. And thanks again, Rohit, my friend. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.